Hey, what's up guys? This is Ed Sorrentino. I'm going to be going over a potential major score play that I do see formulating with the stock Disney, ticker DIS. Right now we're looking at the 1-day chart. Back in right around actually last year, literally 1 year ago, it actually jumped from 117 and it gapped up all the way to 126. That was a major play. It actually broke out in a long ascending triangle. Obviously you can see it here, that was formulating for quite a number of years now. So you can see that ascending triangle there. Just gonna take that off. Okay, all right, so let's just take a closer look since we are looking at the 1 day right now. Let's take a look at the 1 hour. All right, so what I am seeing here is obviously a clear bottom and a V formation, and what I'm also seeing is an ascending triangle forming right here, right on the 1 hour. And I also see that it was starting to retest this resistance of roughly 108 on the dot a few times, and it rejected, however, creating higher lows going upwards. So let's just take a quick look, closer look. I'm going to take a look at a 30-minute chart. So right here you can see the ascending triangle nice and clearly. However, we do know as a trader that this can go both ways. All right, every trade can go both ways. So on the upside, I'm seeing that if it breaks this resistance, it most likely will at least touch the waters of 113, maybe the 114, relatively quickly. However, on the downside is that if this thing does decide to break out on the downside, we know that this is going to take a drop from 102 to, I would say, roughly almost $90. So this trade can go both ways. However, I do think that this will be a play on the upside. So what I'm going to do here is formulate this trade based on the upside breakout. All right, so now let's take a closer look at the 15-minute. I personally like the 15-minute if you're doing option swing trades. I think that you can get a clear look at your RSI and your other indicators such as MACD. So right now I am seeing that MACD is quite high and RSI is also quite high, so it may reject initially. However, it may trade sideways, fill in this gap right here, and then eventually break out sometime, I would say roughly right around here. So maybe by late next week, we're looking at April 23rd. So maybe mid to late next week, we're definitely going to see some movement in Disney. And like I said, if it breaks this resistance, it will most likely test the waters of 113, 114 relatively quickly. So looking at this now, I do want to point out that, you know, RSI on the 1 hour isn't as high, and it's actually creating some type of divergence right here, as you can see. So it did break out there. Potentially it could break out earlier, but however, I am seeing that it could be a nice potential play on the upside for us. So how do you play this? I suggest that you either play options 2 weeks out, 3 weeks out, either in the money or, you know, right at that break-even point at between in the money out of the money. So if it breaks out, I would personally play 2 weeks out. I would most likely buy, if I want to do in the money and spend the money to get that, you know, delta ratio of $1 per point move, then I would most likely buy in the money one of the options that are trading with high volume. You don't want to be stuck with an option that's trading with, you know, 2 orders placed. So I would buy something like that. However, I do think that I would probably play the 108 2 weeks out calls after it breaks out. So I'm going to wait till it breaks out. You know, obviously you're going to lose profit by hesitating on this trade by waiting for the breakout, but you are definitely increasing your chances of success by doing that. All right, so that's it for this trade. Hopefully I'll come up with something next. Alright, so real quick, I did want to point something else out. I did want to point out the MACD indicator that I do like to use, and I think it's significant, especially in trading options. So at the 1 hour, we're going to take a closer look at it. It does look like it is converging between the simple moving averages, and it is eventually going to be breaking out on the upside, potentially something like this. So if that's the case, last time it did break out big, it ran from $86 all the way to 106. That indicator could help us on this trade, especially if it does break out. And if you take even a closer look at it, at the 30-minute, and we look at the MACD, it looks like it's already converging. And it looked like the simple moving averages tried to converge again to create a downside fall. However, it was a false convergence, and it looks like it is breaking out again. So if you take a look at the 2 hour, you can clearly see that it just converged. So this helps us clearly understand that this trade could happen sometime in the middle of the week after these simple moving averages converge and traders see that. So just be aware. Could happen on Monday, could happen on Tuesday, could happen, like I said, later in the week. However, when it does break here, I do think that it will be an upside potential play. And if you buy the right options, right, let's just say you buy the 102s expiring May 1st, which is 2 weeks out from Monday. Deltas are relatively around 70 cents on the point move, and data is only negative 13, so you're going to lose 13 cents a day. That's not bad. If you want to go really in the money, you could buy like the 98 and a halves. However, I would not suggest doing this because volume is just really so low after just looking at it right now in my Fidelity account. If you buy the 98 and a halves expiring May 1st, you get 80 cents on the dollar 80 cents on the dollar with a point move, and you're only losing 11 cents a day, so that's not that bad. However, if I'm gonna buy some contracts that are expiring May 1st, I may look to buy the 107s or the 108s. Those are trading at $3.20 right now, the premium price, and these things are moving at 46 cents on the point move or dollar, and you're only paying $3.20, and you're also only losing 13 cents a day compared to paying, for the 98 and a half calls, you're paying $9.60 for nearly just double, 80 cents, less than double on the upside, and you're losing about the same in time value. So to me, it's like you're paying triple for less results. So I would rather buy the 108s, the 107s or the 108s. Alright, so real quick, lastly, I just do want to explain this a little bit more. This is just a potential trade alert. That means that this could break out on the upside sometime mid to late next week, or maybe even the following week, depending on how the market goes. Or this could break on the downside, especially if some bad news comes out in the market about some Asian dude, drinking bat soup again. So approaching this, we are going to wait for the breakout. Well, at least I personally am going to wait for this breakout, and just be advised, I'm not an advisor, okay? I am not suggesting the purchase of any stock or option. I'm just simply showing you how I am approaching my own personal investment portfolio and how I'm managing my money. So I'm personally going to be waiting for this break around 108 and a half, just to make sure that the break does happen. I do have an alert here. So what this alert does is that, anytime it breaks a certain stock price, depending on where the alert is. So if it does break 108 on the dot, I believe that's where it is, I'm going to get an alert through email, phone, through my cell phone, or my laptop, just so I, stop whatever I'm doing and I just derive my attention to what's going on here. Because if it does break the 108, I truly believe it's gonna, it's gonna run. It's gonna run quick. So I would purchase those 3.5 premium options, the 107 calls expiring May 1st. and I'm gonna probably buy, I'll probably buy, relatively 5 to 6 of these, especially if they're so cheap at $3. And what I like to do is that as this thing goes up, every dollar, I sell one contract. So by the time the stock reaches 113, I only have 1 or 2 more contracts to sell. And by doing that, I'm just significantly increasing my chances of success in the long run. That means doing this over and over and over and over again, because you're taking profit as this thing goes up. Plus, the premiums are at their all-time, at the current day highs, because Vega's so high and everyone's purchasing the options. So you're going to actually sell it at a better price when this thing is going up. So that's what I like to do, and then I always sell at my next resistance. So at 113, I'm selling them all, everything I have in that, and then I'm gonna wait and see. I'd rather give up some profit if it runs a little bit more. Then I'll see where it settles for the day or for the week, and then I'll just look to re-enter and re-exit. I mean, I'm looking to just take, especially on options, you're looking just for a few percentage moves at least on these option plays. So 108 to 113 may not seem a lot percentage wise, especially if you buy the stock, but the options, that's a potential, based on the delta. If it's going up 6 points, and delta is, I believe it's around 48 cents. So you're gonna mean those $3 premium, $3.50 premium is gonna be worth $6-7 plus, it's delta with the Vega and minus theta. So that's almost like a double play right there, which is pretty damn good. And like I said, it's probably going to happen fast and quick, especially when it does break. So, you double your money right off the bat. It's not that bad, especially in a minimal amount of time. All right, that's all for this trade alert. Just like I said before, I am not an advisor. I'm not promoting the purchase of any stock or option. I'm just simply showing you my analysis. I've been personally doing this for about 2 years. And I was actually trading Bitcoin for 3.5-4 years, and then I started trading stock around 3 years ago, and then started trading options about 1.5 years, 2 years ago. But if you're still new to this, I suggest just playing around with stock, because time value will definitely bite you in the ass if you do not know what you're doing. But for all you guys that do know what you're doing, definitely take a look at this stock. Definitely consider this analysis, and I just wish you guys the best of luck.